Hello and welcome to another episode of Stockwatch. So as we enter the trading week, we hear that the Brexit train has no signs of slowing down as some companies are starting to, well, let's say pull out of operating in the UK and in London especially, as it's probably one of the biggest financial hubs, not only in Europe, but in the world. So Deutsche Bank have actually started relocating over 100 bankers from their London offices. And as I said, it's a restructuring of its corporate banking prospects, let's say, as Brexit has finally hit us. Under the plan, a quarter of the division's 400 UK staff are being made redundant, unfortunately, with their roles moved to other places, including Frankfurt. Some of the London-based staff able to work within the EU can reapply for their jobs, but have a 25% pay cut. So this is a big restructuring plan for the German giant. And Deutsche is also using Britain's exit from the EU as a broad opportunity to cut office costs in the expensive cash-laden city that is London. So obviously office space there is widely known to be very, very expensive. So, even if it doesn't relocate a lot of its workers, you have this working from home policy now that a lot of companies have taken on board to save cash on office space as well. So, this is a sign of things to come. It's not only Deutsche Bank that have done this. Citigroup is also moving over 200 people from London, and 150 of those people are actually going to Frankfurt. So, very, very significant times we're living in at the moment. And also, I just want to touch on Commerzbank as well. When they posted a surprise quarterly profit recently, they're actually also in a bit of a restructuring plan themselves. They are actually expecting a slight rise in annual revenue instead of a minor decline, and it added that it is likely the loan losses that it did take on board will not exceed over 800 million euros, and the projected figure is 1.2 billion euros. So that's quite promising for there as well. And they're obviously trying to make redundancies as well. They're planning on slashing 1 in 3 jobs as well. So, as I said, a sign of things to come for banks. But, if we look at the stock prices for Deutsche Bank, first of all, this is on a daily chart. We're seeing such an accentuation to fresh highs, and it doesn't look like it's going to slow down anytime soon. We've got a slight, let's say, hummingbird action here, where we're having peaks and dips. Another peak now. I am expecting it to lose momentum slightly, and obviously, a nice sell position is going to be put in there until we probably get to the top border of the Ichimoku cloud, and that will probably be my support roughly around the €13 area. We're seeing just a slight divergence. As I say, this is on the daily chart. Earlier, we didn't have this vast peak on the RSI, so there was a bit of more of a full bearish divergence. But things are looking pretty good for Deutsche Bank at the moment. In the near term, I'll just bring it down to a 4-hour chart. As you can see, like I said, a nice hummingbird pattern here. We had nice bullish contingencies when we had Q1 profits being released. As I said, now we're just waiting to see momentum start waning. Slight bearish here, but we'll see how far it starts coming down in the near term, because I do expect a little bit of a pullback in the next trading session. And on Commerzbank, again, just start off on the daily. Very, very big accentuation there for Commerzbank, looking very, very bullish at the moment. These Q1 earnings have really propelled prices to the upside, and now we're just waiting to see this RSI start to wane, because it will do, and then we'll just see how far the pullback will be. If we just take it to a 4-hour chart as well, again, we're trading very high above the Ichimoku cloud. Good indication that the bias is still on the upside. Slight consolidation at the moment, so we're just waiting to see what the opportunities are for Commerzbank in the near term. What I would probably be looking out for is a little bit of a slowdown, a pullback to this area here, just above 6, and then maybe another bounce to the upside to at least get to this recent peak that we've seen, to test it again. 6.6, very, very significant there. And again, as I said, the RSI is giving me very good indication that we are probably going to start seeing a bit of a pullback, slight bearish divergence here. And we'll just wait and see what the opportunities are as we go into the middle of the week. And obviously, with these cost-cutting measures that both banks are looking to capitalise on in the next quarter, to see how far this is really going to push the bank's prices, and if there's going to be any form of a sell-off or not. So just a few things to look out for the German giants in the next, or probably the next month or so. So that's all from the Stockwatch today. Thank you very much for joining me. If you have any comments or queries, as usual, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.